A very good morning to you all. I am Dr.N.Rajasree, Assistant Professor of Economics, Pingil Government College for Women, Badapalli, Warangal. Today you are going to learn about the rural credit in India. What is rural credit and why it is important? So you can remember generally the agriculture development of any country depends on the availability and adequacy of the credit. So credit plays a very important role. Okay, so the Indian farmers are facing many problems in the farm credit because they don't have the credit facilities. So they are not able to get proper returns from agriculture due to the non-availability of credit in time. So in time, if the availability is not there for the farmers, they are not in a position to get to increase the to production. And you can remember that according to T.W. Sludge, he opined that lack of adequate credit is hindering the growth of the farm sector in India, and it became a serious obstacle in modernizing the traditional agriculture sector. Therefore, credit plays a key role in stepping up and stabilizing the agriculture growth in India. Okay, and the farmers, they require the credit all stages of farming. Credit plays a very important role for them. Okay, hence provision of adequate credit to the farmers is very essential for the development of the farm sector. So you can remember that among in agriculture sector in rural areas, the people that is small and the marginal farmers, they occupy a large number. So who are the small and marginal farmers having below the 1.2 acres of land? Okay, based on the acres of land, about their land holdings now, they have classified the small and the marginal farmers. So here our government is also adopting a multi-agency approach to provide the credit facilities to the rural development. Even nowadays the government is taking some steps to provide the credit facilities to the people. So mainly, so in this chapter, we discuss about some of the important financial institutions. What are the financial institutions are there which provide the institutional credit? Okay, how many sources are there? And what type of credit facilities the government is providing? Okay, how many types also you are going to learn. And then the next we can say that why, what is the need for this rural credit? Okay, so the majority of the agriculturists we have discussed now in India own the small and the marginal land holdings, and they do not have the sufficient financial status also in order to get the qualitative inputs and the modern technological knowledge. So if they have the sufficient financial status now, they can use the technology also if the financial status position, if it is good. So automatically there is a chance for them to use the new techniques they can use and they can increase the production. So can remember that, hence they need the credit facilities. Okay, majority in the agriculture sector, the small and the marginal farmers will be there, and if the position financial status is good, if the availability of raw materials and other things, everything, the inputs what they required for their production purpose, if it is there, then they can use the modern technology also. They can implement those techniques and they can increase the production, provided that the government has to take some steps. The government has to give some credit facilities to the farmers so that they'll make some improvements on their lands. They can increase the production. If the credit facilities are there, then there is a chance for them to buy the seeds and the fertilizers and other things to increase their production. The next, you can remember the features. What are the features of good credit? Okay, that is also very important. How, if the credit facilities are provided, okay, fine. When they have to provide it, what time they have to give, that is also very important. So soon after, like suppose if season is over, if the government is providing, what is the use of giving the loans? So here, whatever the loans are given, it must be adequate and to meet the needs of the people for which they are meant. So here you can see the rabi crop, kharif crops are there. So accordingly, they have to give the money for them to buy the seeds and other things. So if the loan facility, if they are provided after the season, then there is no use of that provision. Okay. So try to remember the loans, whatever the government is giving to the farmers, they must give within that time period only. During which season they require. Before only if the provision is there from the government, then it will be useful for the farmers. That is the next one. They should be given at proper time. Time is very important for them. And the loans should be given not for only for one purpose, but for all the allied activities they must provide. Who has to provide the things for the people, for the farmers? So only the government has to help, so that they'll make some improvements on the lands and they can increase the production. If there is an increase in production, what happens? They can get better prices for their produce also, and for the reinvestment purpose also, it is useful for them. Okay. Then effective administrative machinery is also important for the recovery of the loans. That is also important. And the credit should be provided for all the time period requirements, such as, you can remember, the short term, the medium term, and the long term credit. So you should know the purpose. What is based on the purpose only the loans are provided. Suppose the farmers, they want to buy the seeds. So if they want to buy the seeds, they provide the short term. Okay. For making some buying the tools and other things, they provide the medium term loans. And for buying additional lands, making some improvements on the land, okay, digging of wells, for that purpose they provide the long term credit. So you can see in detail. Like the next one, you can see. So the classification of the credit classified into 3 types. That is short, medium, and long term. So here the short term credit, it can be defined as that period of loan which varies from 6 to 10 months. So only for 6 to 10 months, if the provision is there, that type of loan is called as short period loan, and the farmers will repay these loans immediately after getting the income from the crops. If they get, they will provide they will repay the loan to the government. So generally the farmers require these loans for meeting the various expenses on the seeds and the fertilizers, pesticides, wages, and also transportation. For these purposes, usually the farmers, they'll take the loans. Okay, try to remember in this short term period, 6 to 10 months, and the purpose. So based on the purpose, fertilizers, for buying pesticides, and for paying wages, okay, for the transportation also, they can use that amount. Whatever the government sanctions, that amount they can be used. That is called as short-term finance, the short-term credit. Then the next we can see the medium-term credit. What is this medium-term finance? The period of loan which ranges from 1 to 5 years is called as medium-term finance or the credit. And these loans can be repaid in installment only. The farmers need these loans. Why? What is the purpose? To purchase the cattle and also the farm tools or the machinery, and for other purposes, mostly buying the what is that machinery and other things, they take this medium term loans. Then next we'll see the long term loans, long term finance or the loans. So farmers, they need this type of loan to purchase new farmland, some additional land if they want to buy, and also heavy machinery if they want to buy, like pump sets or the tractors or the oil engines. If they want to buy, they'll take this long-term credit. Okay, and also the land development activities are also concerned. So the period of these loans vary from 5 to 20 years and can be repaid on installments only. okay, spreading over a long period of time. So try to remember the classification of rural credit, how the credit has been classified, short term, medium term, and the long term, based on the time and also based on the purpose. They have classified into three types. So these three types are very important. So remember that, the classification of rural credit. Then the next we see the sources of agriculture credit. Okay, fine. We have seen how the credit has been classified. Okay, how many types, and we have seen the need. What is the need for this rural credit, and everything we have discussed. Now, what are the source? Okay, what are the sources of the agricultural credit? So you can remember that there are two types of sources. One is institutional sources, another one is non-institutional sources. What is the basic difference between institutional and non-institutional? Institutional means all the institutions, that is the banks. Okay, shortly you can remember the banks. And non-institutional is nothing but it is not an institution, that is money lenders, traders, relatives. Okay, comes under non-institutional sources. So first we'll discuss about the institutional sources. Okay. So here the institutional sources in this now, the government is the first one. So here the government, the volume of credit which is supplied by the government directly to the farmers, they supply the credit to the farmers, and it is considerably lower in our country because it is about 4% in the total credit. So during the times of natural calamities, usually the government will provide the loans like droughts, okay, the famines, or floods. So during these natural calamities, now the government will provide loans. Okay, situation based. Natural calamities occurs, nobody will help. Only the government has to help for the farmers or for the people. So try to remember the government will sanction direct loans to the farmers. And what about the rate of interest? At normal nominal rate of interest only, the government will provide the facilities. Okay, and these loans are called as Takavi loans. Try to remember, when the government provides these type of loans for during the natural calamities, now those loans we call it as Takavi loans, and which can be repaid by the farmers only on the installment basis only. So the in institutional sources, we remember the government is very important source for the people during the natural calamities. During the natural calamities, the government plays a very important role, and the interest also, nominal rate of interest only they'll charge, and they'll provide the loans to the people. And what type of loans? We call this uh, loans, that is Takavi loans. And the next we can see the cooperative credit societies. So this is also an important source for the farmers. So here in this, the share of these societies in the total farm credit is higher, because usually the farmers, for the farmers purpose only, these societies they have established to provide loans at the cheapest rate. Okay, and the best way of providing credit to the farmers is cooperative credit only. So the societies have entered in the field in which year? In 1904, they have entered into this, and with a view of supplying adequate credit to the farmers in time. So the cooperative societies plays a very important role in provision of credit to the farmers. And here it functions at village level uh, and have the contacts with the farmers, and these societies function effectively. So here it is, we call that as a, what is that? Three tier, that is primary agriculture credit societies, PACs, that is at the lowest level, and these are organized at the village level. Remember that, PACs, PACS. And the second one, that is the district level, that is district cooperative credit society, banks, DCCBS, district cooperative credit banks. are organized at the district level. Okay. And at the third, that is apex tier, that is state cooperative banks are organized at the state level. So try to remember it is a three-tiered structure. Okay. Cooperatives, they provide the loans at the lowest level, middle, district level, and the state toppest level. So it is a three-tier apex. You can remember that is it plays, and also it provides a short-term, medium-term loans to the farmers through these DCCBs and PACS. So in short, you can remember that this plays a very important role in provision of credit to the farmers. Is it clear about the cooperative credit societies? You can remember in the 1904 they established mainly to provide the loans to the farmers, and it is a three-tiered structure. The short-term cooperative credit structure is based on a three-tiered structure is a very important. Okay, at what level they provide the loans. And then next we see the commercial banks. You know about the commercial banks. Commercial banks plays a very important role. In which year they have been established? 1969 they established. Later in 1980, some more banks they have established. Okay. So try to remember about the commercial banks, how the provision of agriculture credit they are providing to the people. So this is also very important source, in which after nationalization only the banks, the commercial banks are playing very important role. 14 major commercial banks were nationalized in 1969, and 6 more banks were nationalized in 1980. So that you can remember how the commercial banks are playing important role. Then even the RRBs are regional rural banks, not railway recruitment boards. It is RRBs, regional rural banks. They started on 2nd October 1975. You can remember that, mainly to provide the loans, supplying more credit to the farm sector only. And with the expansion of the branches in rural areas, the commercial banks and also the RRBs are providing more credit to the farm sector. Okay. Remember the years. Cooperative Credit Societies 1904, and commercial banks 1969, 14 banks, and 1980, 6 more banks were nationalized, and RRBs 1975. In which year they have established for the provision of credit. Okay. And these are the institutional sources for providing the credit to the farmers. And the next we see the non-institutional sources. Now you got an idea what is an institutional source and how many types are there. Okay, all type of the commercial banks, and we have seen regional rural banks. Okay, Andhra Bank, all this. Now Andhra Bank is not there. Union Bank and SBH, SBI. Okay, these are all the commercial banks. And the next we see the non-institutional sources. In this non-institutional sources, first remember, in non-institutional sources, what are the sources? The first is, it is not an institution. Okay, fine. Money lenders will come under non-institutional, traders, commission agents, landlords, relatives, and also the friends. Okay, so these are all the non-institutional sources. So we'll discuss one by one the money lenders. So when there is an absence of adequate institutional credit facilities now, people they have the fear to go to a bank and to fill the form, and one surety they want and the signature and everything. They have the fear of filling up the form and approaching to the person also. They'll have that fear. Got it? So in the absence of this institutional credit facilities, na, the farmers in our country are forced to depend on money lenders. Usually they'll go to money lenders only because it's an easy for them to get the money from the money lenders. Because simply they'll give the money. They'll keep all the papers and other for surety purpose. They'll keep all those things and they'll give the money. Got it? So here, now there is an awareness. Okay, fine, we are reducing the money lenders role, but people now with high rate of interest also, they'll go to money lenders only. They want only the money lenders to give the loan. They'll have that in their mind. So now here, when there is an absence of adequate institutional credit facilities, now the farmers in our country are, they'll depend forcefully, they'll depend on money lenders only. But this is very highly expensive and also highly exploitative also. So it is not noteworthy to observe the share of money lenders in the total credit. Why? Because now here it is not it is not playing an important role nowadays, because people, they got an awareness where we have to go and everything. There is an awareness and they are moving forward. Okay, to take. So here, many people are now, we can't say that majority, that 50% usually, like they never come out with the clutches of money lenders once, because they are in that, based on those papers only, they'll give everything. Now it is a very easy process for them, and they'll think like that, and they'll go usually to the money lenders. Okay, fine. And here you can remember the moneylender's role, how it is playing an important role for the farmers in absence of the institutional credit facilities. No need of going to the bank, and no need of going to the bank people and asking for the form and other things. They'll have that fear. Na? For that purpose, the people, they'll not approach to this institution, and usually they'll take the money from the money lenders. Okay. Then the next we see the traders and the commission agents. So the next to this money lenders, we have the traders and the commission agents. And they occupy a very important place in our agriculture credit. They lend the farmers against their crops at higher rates of interest. Okay. Moreover, they charge heavy commission on the produce of the farmers, and they force the borrowers also to sell their produce to them only at lower prices. Because these people, they'll go to the farmers and they'll take it at very low rates. Okay, these people, they pay very low rates to their produce. So usually people, these traders, because it's very tough process, they'll think, and they will usually, they'll not bring the produce to the market. Okay, meanwhile these traders and the commission agents only, they'll give up everything and they'll go, and whenever they'll check will be ready now, they'll come and they'll take their money. Okay, so here this is also, it is an non-institutional source. And the next one, we see the landlords. So here many small and the marginal farmers, often they borrow funds from these landlords only, both the purpose for productive purpose and also for non-productive purposes. Na? These people, they'll give the loans. They'll not see the purpose, whether you want to buy the seeds or the fertilizers or machinery or other things. They'll not see anything. If they want for any purpose, not only for productive and also for non-productive marriages or ceremonies or anything for unproductive purpose, which will not increase any production, for those purposes also, what they'll do, they provide the loans to the people. Okay, fine. So here landlords also, they provide the loans not only for productive but also for the non-productive purposes. So here the rate of interest also, they'll charge high, and usually these borrowers are they'll have the risk of leasing their lands and become farm labor. They have that in their mind, because usually if they are not repaying that money, what they'll do, they'll take their lands also. Okay, so that is there in this landlords, and with the view to grab the lands of their neighboring farmers also, some big lands, they encourage the small and the marginal farmers to borrow loans from them only. They'll think and they'll give the loans and everything, they'll provide for them. Okay, so this is also one of the source for agricultural credit. Then the next we see the relatives, and the friends also. Okay, we take from our relatives, and also because the money, when we require, we have to approach. If there is no other source, usually if our friends and from the relatives also, we can take the loans, and we can borrow the money from the people. So these loans are uncertain and they do not satisfy the credit requirements of the farmers. Why? Because farmers repay these loans soon after getting the income from any other source also. Okay, so many loans of these are oral loans, interest free loans, because they'll not take interest, because friends only now, they'll not take any interest also, and they do not involve any type of exploitation also. Got it? So this is our friends and the relatives also. Usually we take some amount, and it is what is that? Nowadays there is no guarantee. If we are giving the money to when we are taking the money from relatives now, and there is no guarantee that you have to the people, whoever they are borrowing now, there is no guarantee that again they'll repay that amount. Okay, they'll get reback that amount repayment. They'll have, nowadays it is not in a position to give the money itself. Okay, so here you can remember the non-institutional sources: money lenders, the traders and the commission agents, landlords, relatives and the friends will take the loans. So try to remember whatever we have discussed, that what is agriculture credit we have discussed, and what is the need for the, when the government provision must be there, provision of credit, during which period they have to provide, in time they have to provide the loan facility, so that they can use that amount for their purpose within that period. And also what are the types of credit also we have discussed: short term loans, medium term loans and the long term loans. And next we discussed about the sources. Institutional sources we have discussed, and we discussed about the non-institutional also. So institutions means what? Banks. All type of banks comes under institution. It is an institution at lower rate of interest. They'll get the money. And these non-institutional sources, what? They'll take high rate of interest, and also they provide for both the purposes. For productive purpose they provide, and also for non-productive purpose also they provide. So for both the purposes they'll get the loan. So try to remember what are the sources and why the credit is essential for the people. So usually the agriculture sector, for the people, na farmers, they need the credit. That is a must. For again, for reinvestment purpose also, they have to use that amount. If the loan facility is not in time now, then they have to face, they cannot increase their production, and also they cannot reinvest that amount for the next crop. Got it? So try to remember the sources and the importance of credit. Thank you very much.